Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about Trump's pick of Kevin Warsh for the next Fed chair and what that means for mortgage rates. As always, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to this special episode of the HousingWire Daily podcast, especially with this big announcement. And I know that you're sick too, so thank you for joining us.
Kevin Warsh 2.0. That's kind of what I'm saying. It's last night we had a lot of drama because the 10-year yield was at 4.23 and then it shot up higher, went up to 4.28. Now it's back down to 4.25. So only a little bit higher after the news. Just for everyone, Kevin Warsh is one of the more hawkish Fed people this century. So for all of us that have known Kevin, this would literally be the most opposite pick from what Trump wants. Like, you cannot get any more to the other side of what Trump wants today. But Kevin Warsh 2.0, and everyone has to realize Kevin's family and Trump's family have known each other for decades. So that's not, he married himself into the Estee Lauder family. So the ties go all the way back to Wharton. Kevin Warsh, as soon as Trump was in power, has changed his tune 100%. So I understand with all my financial friends who are listening to this, I totally get it. I was hashtag anyone but Warsh. There's a lot of things that we and the financial community do not think he's, would be a legit person. But as long as Trump is president, he will do what Trump wants. So 2.0, Kevin Warsh will be more dovish, will sound more dovish. We'll talk about AI productivity. We'll try to get the housing market back. So it's the same premise as before. Whoever the next Fed chairman is going to be more dovish in that sense. When Trump leaves, it'll be a whole different story. He'll go back to old Kevin.
What is the term? How long do they serve as Fed chair?
Oh, I mean, they could go for a while. It really depends on how, whoever the president wants to reappoint him, so he could be here for a long time. So we'll cross that bridge when Trump leaves. And I don't want to lose focus onto what it is this year, this week. As always, I'm not a bond vigilante guy that thinks that the bond market is going to always show. Fed policy is less strict now. We have a lot of rate cuts in the system. The spreads are better. So in regards to the housing market, which this audience is for, Kevin Warsh 2.0 will try to make everything better for Trump. So I know it's just really weird, for me to say this, but this is just the world we operate in. And in no other crazy, bizarro circumstance would Kevin Warsh be even nominated for something like this. But his ties with Trump and the way he presented himself and his change of tune on a lot of things. So we'll take it from there. But there's a lot of going back in time and reading what he's said during the great financial crisis and how wrong he's been on a lot of things, and he hates the Fed and he bashes them, and nobody the Fed likes, so this was obviously not a what I talked about before, that Trump might be waiting for the Supreme Court to see if he could fire governors. This is a more dovish Warsh for now, and that's how we should all look at it, and we'll take it from there.
That's really helpful, because everything I saw this morning was like, why this pick? Because we all know that Trump's whole goal here is to get mortgage rates lower. To do that, he needs interest rates lower. To do that, he needs a Fed governor, a Fed chairman who's going to listen to him on this, or at least that's what he thinks. So I think that's why people were so confused. It's like, we know what the goal is, and this guy doesn't seem like he would be fitting that goal. But to your point, he's like, he has already pledged that, or he wouldn't be picked.
Yeah, I mean, he would not be, and we have to always remember the market is pricing in as much as neutral policy already. Again, it's really hard for the 10-year yield to go below 380 with neutral policy. If the labor data gets better, this is one of the reasons why I had 440 and 460 on the 10-year yield on the upside. If job market reaccelerates and wages go up and unemployment goes down. But for now, all this is you're going to have a new Fed chairman that's going to be dovish, where Jerome Powell wasn't in that light. So there's going to be a lot of stories about this today, tomorrow, and going out. But as long as everyone understands this is Kevin Warsh 2.0, and it pains me to say this, that he's going to do what Trump wants. And we probably don't have to worry about the old Kevin Warsh even up to mid-2024 out there. And if all of us kind of know in the financial community that he's got ties with Trump's family. So this is just kind of, loyalty pick, as we've always said out there. And the Fed pressers will be much different going out in the future once Jerome Powell is gone.
So, of course, Warsh still has to get confirmed by the Senate. And, several senators, even a Republican, have said, hey, they're going to hold that up as long as the DOJ still has an investigation into, still subpoenaing the Federal Reserve and Jerome Powell. But that could end tomorrow if the White House wants to do that. He could
all Trump has to do is say one word, and that investigation will go away. So,
yep.
So this is just a lot of this is theater out here, and this is the world we live in. I don't have to really understand everything. I just have to be able to operate in it, and we're operating with kind of new rules in this, and we just got to go with it. But I of all people know the old Kevin Warsh would not be in this position with Trump unless he made a loyalty pledge to Trump. And as 2.0 Kevin Warsh will be much different than his historical background. I mean, everyone's going back and reading all the things he's said and done, and people are scratching their heads. But I get it, but you have to understand, this is not that guy. That guy will come back at some point in the future. But for now, as long as Trump is president, he'll do what he wants.
Okay, so 10-year yield immediate reaction, as you said, was to go higher. It's moderated a little bit. Of course, Trump wants to, see massive rate cuts to the Fed funds rate. That's not going to happen, right? Just because he has a new president once Powell leaves, that doesn't mean that that's going to happen. But in the short term, what do you think the 10-year yield does?
10-year yield just stays in its channel. I mean, it's just,
Okay.
Nothing really. I mean, I don't change my view at all with a Warsh pick or
on your mortgage rate forecast.
Yeah, or Waller or anything. The Fed chairman cannot unilaterally do anything, but there'll be more of a dovish theme. So when we do these live events now in 2026, I think we've done like 15 of them already. This will be a more dovish sounding Fed presser out there. So in that context, it's a positive, right? You're not going to have Jerome Powell saying this or that. You are going to have a different kind of Fed chairman. The interesting aspect, Trump always talks about he wants like the lowest, like we're the wealthiest country, we should have the lowest rates. That's not how the Fed funds rate works. A home buyer that has a 760 FICO score and 50% down, yeah, he'll get the lowest rate in the market. I could give it to him, but it's really hard, again, going back all the way to 2022. To get under neutral policy, you need the labor market to break. Now, one thing that is going to be more apparent now, if the labor data gets weaker, Kevin Warsh, Trump, and everyone will full blitz the Beth Hammocks and the Lori Logans, those types of people that are, wanting to stay, no more rate cuts, possibly hike rates, stuff like that. So I know it's confusing, and we talked about this on Instagram Live. This is a very odd choice, but one of the things I've said is, hypothetically, if the bond market goes against Warsh, and that's a big if, but if it does, let's say the 10-year yield goes to 445, 455 on its own without any data warranting it, I do believe Warsh will just withdraw himself out here from the proceedings. As long as Powell is there, the legal ramification of just withdrawing yourself can happen. So we'll cross that bridge if that ever gets there. But for now, kind of just as crazy as this sound, just think of this as a more dovish Fed that will do Trump's kind of bidding, and we'll just take it from there. And kind of don't get into the real crazy talks that, now this is, the dollar's really going to collapse now because the Fed has been bought off or stuff like that. Just always remember the economic data runs the show. All the Fed is doing is trying to get to neutral policy. This might make it a little bit easier to get there faster, but it's really hard, again, to get mortgage rates below 5.75% with neutral policy out there. The spreads are much better now. The volatility is not much. I hope everyone could see that with mortgage pricing. Not much is going on. I mean, look at all these we had these 24-show headlines, lately. And we had Fed meetings, all these things. And mortgage pricing has been when I talk about volatility compressing and things just, not moving as much, this is it. So the spreads, again, have done their job this year, but it's confusing out there. I totally get it. I mean, some of us, this is all we do in our lives, so we know all the players and what they are.
Right.
But for normal people, they see all these really hawkish things like Kevin Warsh has talked about over time. I mean, Kevin Warsh is like a free trader. He hates tariffs. It's just rates were too, low in 2024. So I get it, but this is the world we operate, and Trump likes loyalty. And this is Kevin Warsh 2.0.
He does. Okay, well, I will say, incredible timing for our Housing Economics Summit. My gosh, we could not have better timing. That's February 10th. You guys, if you're not signed up, you should be there. We have so much to talk about, and we have gathered the best economists, housing economists in the country there. It's going to be incredible. Logan, of course, but also Barry Habib, tons of amazing speakers to talk about all of these things. And that's just in like 10 days. So Logan, thanks for jumping on.
Yes. Well, very fortuitous timing for everything. And we always said 2026 is going to be crazy. And we just got a lot of crazy headlines in just the first month. So it is what it is. Have fun with it.
All right. We'll talk to you again very soon.